situation is very uncertain, and just trying to stay with it.
Yeah,
I mean,
getting hit, right? Yeah. Bennett, John Baptiste.
hi Gene, how are you?
Hello.
So how about situation on your side, Hisham?
It's okay. We have sirens every day because missiles go from Iran to Israel and Israel to Iran over Jordan. So, and some of them fall here accidentally.
It's like playing a ping pong, yeah.
And we're in the middle, right? Oh man, when the war started, the schools all closed and the kids were on remote, but now we don't even notice the sirens. We don't even, yeah.
It's a very good training of us.
We're actually giving, where is it? Let me show you. Here we go. We're giving this next week. It's resilience.
Exactly.
For MEVCA. So we're doing.
I saw this on LinkedIn. You want me to share this as well? I will talk.
No, it's just for their members for some reason. They're very snooty.
So, but this is, I mean, we are, by the way, we are used to of it, and back at home as well. So I think we are halfway resilient, but this is even more like, and I certainly believe running away from such a situation is not an option. You rather have to face it and just stay with it.
Yeah, I heard Dubai is a ghost town now. Everyone's leaving.
It's yeah.
Yeah, it is. Okay.
Yeah.
Kind of showed you who was there for vacation and who, right? Like we didn't leave. We're not. My team in Lebanon isn't leaving. They just moved to the mountains. Yeah. Not tonight, Baba. Sorry, my kids. Just 1 minute. Yeah.
So Gene is with us, Hisham. He's from France, and Gene is also with us.
Hello.
In this situation.
Hi, Gene. Where are you? You're in Dubai?
Yeah, exactly.
Okay. Interesting times. They close the airspace, they open it, but the picture of all the Emirates planes on the ground, it's just out of this world. It's like COVID.
Unusual, yeah.
Yeah. I have a feeling he's going to be the only one. I don't think people are going to come to a webinar in the middle of a war, Ayub, but I'll leave it to you.
No, we have
we have two. Okay.
the startup founders are resilient by nature.
They are resilient.
They are. If they cannot face this was my answer to everybody out there. Worst time is the best time for a founder.
Yeah.
And if you're running away from such time, you're not a founder. You should rather find something else.
Yeah. Words of wisdom.
Yes, this is how it is. This is how it is. There are even strong battles ahead.
Yeah.
So if you're running away from this, maybe you should find something else.
Yeah. Gene, you're from Paris or from?
Yeah, from Paris, yeah.
Okay. I just go to the touristy parts of Paris. I don't know anything about it. Yeah.
Oh, there are some beautiful places.
Yeah.
When you are a tourist.
Yeah, and I went to Alsace once.
Alsace? Okay, cool.
Yeah.
That's
actually
a nice place to be.
Today I learned the French pronunciation of Jean-Baptiste. This is what
Exactly.
it's not.
Exactly. Perfectly said.
I rehearsed several times before.
Okay. Jean-Baptiste, but that's a lot of, okay, so in Louisiana in the US, there's a lot of French influence. So a lot of people
Yeah.
have the name there. Jean-Baptiste. They call it.
It's a very French name. Yeah.
Oh,
Very
okay.
French and Christian also.
Okay.
Hmm.
Mm.
So good. Yusuf will not join us. He said he had some emergency. Adil, I guess they will join us in between, but we will not waste our time and we will begin it.
Okay.
Madhu is with us. Would you guys open up your cameras? So it would be a good one. I will take a picture and then you can switch off.
We have to record this, otherwise they're gonna kill me.
Yeah, we are already recording with Fathom.
Okay. All right.
That be okay? Like Fathom gives you detailed video recording.
Oh, they does. Okay, good. Good.
Yeah, I will share with you complete recording of it.
Thank you. Hi, Madhu. Hi, Osman. So we
Hi,
have three
Hisham.
people. That's nice.
Nice to meet you.
Nice to meet you. And where are you guys based?
I'm from India, the southern part of India.
Okay.
Yeah.
Awesome.
I am from Canada and Pakistan.
And
So
where?
I keep moving.
Yeah. And where are you now?
Now I am in Pakistan.
Pakistan. Okay. And
Yes.
John Baptiste is in Dubai. And
Exactly.
Tuhidul.
He's from
Hello.
Bangladesh. So we have a very diverse cohort.
Yeah, very
Mhm.
cohort. That's nice. Yeah.
Yeah.
Okay. And Madhu, you're in Dubai or India?
I'm in India.
You're in India.
Yeah.
Madhu is living in India, but she's working for UAE. So
Oh,
her heart and soul is in here. But she's
okay.
Yeah.
And Tuhidul, where are you based?
I am based in Bangladesh. I'm from Bangladesh.
Okay. No, Sahla. I mean, and we have Sayed,
Adil.
Adil.
Hi.
Hi. How are you?
Good enough.
Yeah. Where are you based?
In Dubai, actually, yes.
You're in Dubai. Okay.
It
Okay.
gives motivation, Hisham, isn't
Yeah.
it?
Yeah. This is more motivating. Okay. All right.
So great. I will give a short intro about Hisham, and the purpose of today's session is to understand how you can structure the deal, how safe notes are being signed between founders and investors, and why does it even matter to understand safe notes before sitting on a table with investors. So Hisham is an expert lawyer. He's been closely working with the venture capital firms and has been dealing with the mergers and acquisition, have been involved with the corporate practice for a long time, US-based attorney, but living in Jordan and traveling frequently across UAE, Egypt, Saudi, and most important and big deals are happening with the assistance of Hisham. Very proud of you.
Thank you.
So over to Hisham.
Thank you so much, Ayub. I love doing these. This is like our third one this year. The work Ayub's doing it's great. Taking
Thanks.
early stage founders and turning them into having MVP and helping them raise money. It's really hats off to you.
Thank you.
We have a few more people join us. How do I see? How do I see who joined us? All right, we have
I
Osman.
think Bilawal joined us.
Adil.
He's co-founder with Adil.
Okay.
Adil, can you switch on your camera for a moment? I will take a picture and then you can switch off.
Yeah. Adil.
Hisham, go on and I will take time.
I'm trying to see. Okay, so in the chat, I'm going to put a link. This link has all the material we're going to go over today. So, okay, you all have access now. So you can download, so you're not wondering, am I ever going to see this PowerPoint? But before we start, since there's very, very few of us, maybe we go around and everyone tells me a little bit about their startup. We'll start with Jean-Baptiste. What's the name of your company?
Synthetic AI. So let me write it to you.
Okay. Synthetic. Okay. And what do you do?
So we help people visualize their data from anywhere in their computer.
Okay.
So
Okay.
you can ask any question related to data and you get answers quickly and you can converse with it after.
Oh, okay. Okay. Do you have a product? Is it working?
I do.
You do?
I have one which is working. Let me
Okay.
wait. So website here.
All right. Have you raised any money?
No,
No.
I
money.
mean besides family.
Okay. Revenue? Do you have any revenue?
No.
No revenue. Okay.
So website, and here is my my SaaS at the
Oh.
moment.
That's very cool. You know, I was just thinking I needed something like this morning. Okay. That's great.
Feel free to use.
Okay. And you're how many founders? Just you? You're solo?
We are two.
Two.
We are two.
Both French citizens?
Yes, exactly.
Okay.
So actually, so we are both French citizens, but the company is in Switzerland.
Okay. All right. Thank you. Madhu.
Hi.
Hi.
Yeah, I'll just put my company's name here, and I'm going forward with developing a compliance platform, tech compliance for, it's like an integrated compliance dashboard, localized for UAE regulations, more focusing into data privacy and ESG and AI governance.
Okay. Have you built the product yet or not yet?
Not yet. I've built the prototype, but I still have to build the MVP.
So no revenue, no investors, right?
Not yet.
Okay.
yeah.
Okay. All right. Osman.
We are making a platform to organize the city information. And we are going, city information platform. And we are making assistive AI around it. So the agents which will use this information to help people.
Okay. And what is it called? What's the company called?
The company name is Novelma Inc. It is Canadian registered, but the product name is OnTech.
Okay. So you have an MVP or not yet?
Yeah, we have MVP running over 9 months now in Dubai and Toronto. And no revenue, but some traffic, yes.
Okay. Any investors?
Yeah, I'm my own personal investment.
You're the investor. Okay. No
Yeah.
Tahidul, please tell me if I'm pronouncing it right.
It is correct. It's Tohidul.
Tahidul.
So, yes, I'm the co-founder. We are an e-commerce marketplace for buying gold. It's named Gold Bazaar. So where customers can buy fractional gold through our platform from the vendors or the gold shops, but backed by real gold.
Okay. You have the product up and running or not yet?
No, we are in the idea stage.
Idea. Okay.
We have three co-founders together.
All right. So no revenue and no investors, probably.
No investor, no.
Sayed.
Hi, I'm going to write the name of the company here, which is my company and Bilal. So in MetaBridge, we're developing a personal health record that is not bounded by country or by third-party systems. to allow you to own your own medical record and bring it wherever you want and create a family bridge and specific medical-based AI translation on any document.
Okay. That is actually a great, that's a great idea, by the way, because there's no centralized medical records anywhere outside of like North America and Western Europe. Like here, we have to keep all our medical records with us.
Yep.
Do you have revenue or no?
No, we have a prototype. We'll have the product done by May. We're going to launch by May, June.
So no investors and no revenue.
Currently, yes. Where before, like I'm the investor in the company too.
Okay. Good. Well, very, very good ideas.
Kassim is also there.
Yeah. I'm not saying that the other ideas aren't good. It's just this is one I had to face personally. This one. Okay. So I think you're all very early stage, no revenue, no investors. So actually, this is the best time to do this. We already did this. So we try to cover HoldCo versus OpCo and where to register and why do you need HoldCo versus OpCo, right? Has anyone, if you haven't heard of these terms, it's fine. Just raise your hand and we can explain the terms. So we can go through the PowerPoint. Oh, yes, تفضل, please.
No, I did not hear these words before.
Okay. So maybe we do step back. I'll stop presenting. It's good. I think 4 or 5 people is like the perfect size because then everyone has to speak. All right. So as a startup, you have to register your startup. You have to have something they call can you see my screen?
Yes.
Yes. Something called a holding company, and short is HoldCo, right? I think one of you said, John Baptiste said it was in Switzerland, right?
Yeah.
Right. So holding companies are registered in very few places. Switzerland is one of them. The US, ADGM, the IFC, Cayman Islands, Netherlands. There are like 10 of these places, right? And the reason why we register in one of these countries is investors like them. There's really nothing more to it. So venture funds like to invest in known jurisdictions, right? So actually, Jean-Baptiste, you're going to run into this issue. While Switzerland may be very popular in Europe, Switzerland and Netherlands actually, it's virtually unknown in MENA. No one uses it. So if you're going to go after venture funds in the region, I'll get, you're better off going with US, ADGM, actually one of these 3, just because they know it.
Okay.
Right. So just keep that in mind. Yes, Sayed.
I was going to ask about the UK actually, because this is something that we're thinking of having a base between Dubai and London in UK.
Yeah. UK is fine. Again, UK, they don't like it in MENA for a very specific reason. All information is public in the UK. And Middle East venture funds don't like that, especially high net worth individuals from our part of the world. UK works very well for North America, works very well for Western Europe. But if you have MENA-based investors or your main target is MENA, your options are really US, ADGM, and Cayman. Those are the top 3 that we see over and over again. Okay, but so let's say you have your holding company, but the holding company cannot always do work in Saudi Arabia, for example. Who's the one selling stuff to the government, to cities? Who's selling cities? Osman, right?
Yeah, the government is part of.
Yeah. So when you're selling to the government, let's say you're selling to the city of Medina, for example, they may not agree to sign with a company in the US or ADGM or somewhere else. They may want a company on the ground in Saudi, right? So you will register what we call operating company or OpCo. And the holding company will own the operating company 100%. And then the operating company signs with the city of Medina for the contract, right? OpCos, you need them, probably the gold bazaar, the person doing Tuhidul. I'm guessing you need an operating company because you're going to physically hold gold and transact with local merchants.
Right.
Jean-Baptiste, I don't think you need a holding company.
Okay.
Well, Madhu, I don't think you need it. Basically, the SaaS people, I don't think you need it.
Okay.
Because you can operate from your holding company.
Okay.
So, yes, sorry. Oh, Hasib, hi.
Hi, yeah, sorry, I joined a bit late. I couldn't introduce myself or the company
Okay.
because it's relevant now, so I thought I might just chime in. Essentially, I'm developing a marketplace for niche products. So there could be crafts and like rare items and trading cards, etc. And we're going to form vertical microeconomies within the platform based on these product niches. And my question to you is, if I want to operate globally, do I need a holding company and operational company within each jurisdiction, or would it be Delaware and one operational company?
Yeah, so in your case, your operating company will be in your main market. So
Right.
when you talk about crafts, let's say it's
Mhm.
if you're going to trade cars in Saudi,
Okay.
for example, or Egypt, and you're doing 1,000 cars a year,
Right.
then yes, we're going to open an operating company there. If you're doing one car every, I don't know, 1 year, then we can appoint a local agent. Basically, we can bandage it, right? We don't have to do a full legal setup.
Right. Okay.
So, and the same thing for the B2G, the city contract. You will try as much as possible to contract with the holding company. And then if the city says, you know, we're ready to sign, but I need a local entity, then we go and we run and we create a local entity, right? The idea is we follow your work, wherever your work is.
My question is, my one question. So it's same for the maybe marketplace. So if we are only online, so we do not need anything on ground. So still it is allowed to do work in MENA in any market, or it depends on
No,
countries?
you're allowed to work in any market in MENA just online. The issue is your customer. So cities, government, military, big institutions, they sometimes don't like to contract with outside companies. They'll tell you, open a local company and I'll sign with the local company. But that's their requirement. That's not a legal requirement. I mean, Facebook operates in Jordan and Lebanon and Palestine. And they trust me, they have no offices here, but everyone uses it, right? So if you're a SaaS, you probably don't need a OpCo except in the biggest, most lucrative markets. So I'm thinking MediBridge, you will probably need one in the US for HIPAA, which is or there's a regulatory reason. So for medical records, if you need to get are there any fintechs? We don't have any fintechs. So this happens with fintechs a lot. You need a local license to operate. So you have to register a local operating company, but none of you are fintechs. Maybe the gold is a quasi fintech group. I don't know. Okay, so this is HoldCo and OpCo. Your investors are in the HoldCo, the founders are in the HoldCo, the employees are in the whole. Everyone sits. Employees. Everyone sits in the HoldCo level, right? And then you have OpCos if you need it. You don't always need it. And your OpCos are 100% owned by the HoldCo. Does this make sense? Okay. So where to incorporate? Someone mentioned Delaware. Who mentioned Delaware? I think it was Kassim.
Yeah.
Yeah. Do you already have a startup?
I worked on another startup that was registered there. Yes.
Okay. Okay.
Mhm.
So usually when we pick the location of where we should register, because we have a few options. We have Switzerland, US, you know, there are a bunch of places. So in order to pick the right place, we have to see where you're going to end up, where you're most likely going to end up. We don't know where anyone ends up. So does anyone know what the term exit means? Exit?
Yeah, go ahead.
Is when you sell your part of the company,
Yeah. So it's either an
or
IPO.
when someone sells a part of his
Yeah.
part of the company.
Exactly. So it's either an IPO or you sell, they call it an M&A, but you're right. It's when you sell the company. I will put money that no one will IPO. IPOs are very, very rare. So these are number of exits per year. And this is the number of IPOs compared to number of exits, right? You're talking about 5-6% of exits are IPOs. You are much more likely to get acquired, especially if you're a B2B, like John Baptiste. I can see like Excel buying, you know, you can see one of the big players thinking you're very annoying and offer you and say, why is everyone paying him? They should pay us. And then the compliance, we have some big players in compliance, right? Madhu, we have like,
Yes.
yeah. So those are the people most likely to acquire you if you start stealing market share, right?
Mhm. Yeah.
The city Informade Lab, I don't know enough about this and this market, selling information to cities. The gold, again, I'd probably big gold trader would buy you out. Actually, I think Toradul, your biggest buyer could probably be like a foreign exchange, right? Like,
Will it be that because since we are selling real gold, and the vendors will be, or the gold shops will be our vendors, so they will be holding the gold.
okay.
So
Yeah. Sayed, I can see insurance company, some big medical group acquiring you, especially in the medical field. There's a lot of M&A activity. So IPO, I think we almost never plan for an IPO. They're rare and they're becoming rarer. And the reason why I bring this up is because then this determines what type of company we need to register. There's some like chosen stars in Saudi where they say your startup is going to IPO because they need to hit KPI. But for most people, this is not the case. Oh yeah, we drew this, the HoldCo, you have your OpCos. We did all the case studies. Okay, good, we did a lot of this. All right, we did all this also. So our rule is we start at Delaware. So if I don't know anything about you, I say register your company in Delaware. unless there's a good reason to go somewhere else. So Sayed, Medi Bridge, probably the US, because is that your largest target audience, is the US?
The US is definitely a big target, but it will not be the initial market at first point. Again,
Okay.
because one of the key factors, I would say, the health management approach, the cultural approach that is for medical records. That's why I think we need to be way more structured and large to tackle the US market.
Okay.
Because initially we will be competitors against those insurances at the
Yep.
beginning.
Okay. So maybe there's a compelling reason for your business not to start in the US, but for us, we usually just start in the US and then we see where's the best place. We see if we need to move. So the compliance, Mudhi, probably the US, because you're a SaaS, right? Jean?
Yes,
Yeah.
but my target market is only UAE, or expanding to Saudi and MENA later.
Yeah.
But the target is only UAE. So I was thinking of registering the company either in DIFC or in ADGM.
Yeah. The issue with ADGM, so even though you're in the US, I mean, half of the successful startups in MENA are US companies that operate in UAE, KSA. The issue with ADGM and DIFC is that they're really not built for startups. I don't know if you've had any experience. They're incredibly expensive, very slow. They're not really made. I know the marketing says something else, but the reality on the ground is they're not made for startups.
Okay.
Yeah. It's also very hard to open bank accounts. You can't connect banking integration. Like our clients that open in ADGM always telling us Stripe doesn't work half the time. It kicks off half the credit cards. So for actually Delaware, the US, very popular in India, very popular in Pakistan, very popular in, actually, I don't know about Bangladesh, but maybe also popular in Bangladesh. But it's much easier and faster to register there. Okay, so this is why we use Delaware. It's long, it's extremely inexpensive, very easy. So, and investors recognize it. We have many startups in MENA that all incorporate in Delaware, and investors will fund it. So Cayman, BVI. So if you ask lawyers, they'll give you Cayman or BVI or Mauritius as a option. These are, we call them tax havens, the countries with very low or zero tax. They are falling out of style because they're money laundering hubs, so people don't like them very much. So ADGM, we do it for one reason. If you're Saudi and you're a Saudi founder, you're starting a startup that you plan on IPOing in Saudi Arabia, I will register an ADGM company for you because it makes sense. It's worth it. But if you don't fit this criteria, it's really not a good jurisdiction for you. Okay, tax. People want to talk about tax. So, do you know what corporate tax is, right? Which is the tax you pay on profits. So if you have profits at the end of the year, you pay profit. ADGM is 9%. Tax havens are 0, but Saudi, Egypt, Jordan, Lebanon, it's all 20. We're all converting to 20%. I don't know what it is in Switzerland, actually. Maybe Jean Baptiste.
I don't know exactly. The only thing I know from Switzerland is when you sell your company, you have no tax on it.
Great. This is a type of tax called capital gains. So there's 4 types: corporate, dividend, capital gain, and sales. So we're going through it because I just want you to be familiar. so that when you're talking to people or you're talking to advisors or you're talking to accountants, you at least know that there are 4 types of taxes. So corporate tax, for the vast majority of startups, we don't actually care about corporate tax because startups don't post profit for a long time, if ever, right? Usually they keep growing until someone acquires them and then you're done. So yeah, and we use Uber as the example where they were unprofitable even after they made their IPO, then they became profitable. So same thing with dividends, which is distributing profits. Startups, again, almost never distribute profits. They keep growing until there's an exit. So the one we care about is what John Baptiste mentioned, which is when you sell. This is called capital gains. In the US, Netherlands, Cayman, most jurisdictions, this tax rate is 0 for non-residents. So if you're French or Bangladesh or from India and you own shares in a Dutch company or in a US company and you sell your shares, that profit is not taxed, right? This is virtually the same rule in many places. Okay, I will stop here and see if there are any questions.
I have a question,
Yes.
Hisham.
Yes.
So I have decided to register the company in Delaware, right?
Okay.
And my wife, she is a US citizen,
Okay.
right?
Yeah.
Although she's not a co-founder or anything, I wasn't sure if I should add her as part of shareholders. Would that affect the capital gains tax or something like that? Like, I
Yeah.
wasn't sure if I needed a US citizen
You
to be
don't.
part of the company.
You don't.
Right.
We
Right.
use Delaware for people from Gaza with people without passports. We use it for people like have no documentation or have the UN paper. So if your wife is not involved in the business, don't add her.
Right.
As a US citizen, she has to pay tax on her income and her capital gains no matter where she owns it. It's
Yes.
still,
Yeah.
so I
And
think, I'm sorry.
oh, sorry. Yes. Please continue. Sorry.
Yeah, go ahead. Go ahead.
The second question is if I'm a bit confused about this part. So if I am to operate globally, let's say like goods being sold in Philippines or the US, so people who are purchasing these goods or selling these goods would be paying taxes within their own jurisdictions, right?
Yeah, exactly.
Right.
Yeah.
Okay.
So you buy a vintage car from Malaysia and you're selling to, so you're just going to be the marketplace, right? So
Yes, essentially.
yeah, the buyer is going to give you the money, you're going to give it to the seller is going to put the car on the boat and send it to the buyer, right? I mean, it's very logistically challenging. I would start with a logistics partner until you learn.
Yes, we do have that.
Good.
Right. Okay. Great.
So the marketplace, if there's any taxes on the sale or whatever, you just add it to the fee. Right.
Okay. Okay. Just on the website is taxes, right?
Like
Okay.
when you order from Amazon, they say sales tax in your city is 6% and they just add it.
Right.
Yeah.
Okay.
So that's where to register and why we picked Delaware and move. So 3 of you are SaaS, right? Charging relatively like 20. I saw John Baptiste was doing $20 a month. I don't know, Madhu, how much you were thinking of charging per month?
Per month, the basic subscription would be $900.
Oh, okay, good amount. Okay.
Yeah, because it's a B2B. And most of the firms, they pay these big four way higher than that on an annual basis. So it's kind of like 50% lesser than the big four.
Okay. And Sayed, you're B2C, right? So I imagine $10, $20 a month. Is that the idea?
Yes, at B2C, actually, we're getting even to lower side. We're aiming for like 40 or maybe $50 per year.
Okay.
So we
So
want to approach a larger market, even the South Asian part.
So actually, John Baptiste and Sayed, you're targeting global markets. You need global payment integration. So actually, you two definitely need Delaware setup for global payment integration. They'll accept Stripe in the US, will accept credit cards from anywhere in the world.
We have Stripe at the moment.
Yeah, okay. But yeah, the issue with Switzerland is I don't know how many MENA investors know it or are comfortable in investing in Swiss. If you don't find any
Okay.
pushback, then please stay in Switzerland. But I have a feeling someone along the way will be like, "Why are you in Switzerland?" And they're going to have a check for $1 million for you. And Sayed, have you thought about where you want to register?
As I said, I mean, initially we're thinking between like having two corporations, one in the UK, London, and one in the UAE. But still, we haven't incorporated, so this is something in exploration. Because
Yeah.
I think that it happens a lot that at least European startups could just allow they do the initial parts in Europe, then they open Delaware, and they do the pancake flip, basically, at some point.
Yeah. So UK MENA investors don't like UK. They hate it because you have to disclose everything about them. So now we're seeing a lot of, and they just introduced biometric verification in the UK. So if you have, which is just pushing people away. Madha, I think you could get away with ADGM because your market is purely UAE, KSA. You don't have global.
Yeah.
But I think they're going to give you a hard time. So, right. And the city information, actually, you're basically going to register. You're going to do the opposite. You're going to start, Osman, in the country where your first clients are going to be. So where
Yes,
most
we are also SaaS component. So I am thinking between Delaware and Cayman, one of them.
right. So Cayman, most cities and governments don't like Cayman.
Right.
But where your first city is going to come from, you think?
So Toronto, we are operating in Toronto also.
Oh, okay.
So
Okay. So Delaware, you don't even have a choice. It's Delaware. Khalas, you're in Canada, that's it, right? The goal, Tahidul,
Yes.
I think you will also start with your OpCo because you need to contract with local jewelry people, and you
Right.
probably need a license in the UAE to do this, right?
If I do operate in UAE, definitely yes.
Yeah. And you're going to operate in UAE. That's your first market?
No, but at this moment, we have started with the idea of operating in Bangladesh.
Bangladesh. Okay.
Yes, but if later on UAE and Africa is my next.
Okay. So start with the operating company in Bangladesh. You're one of the few people to do it the other way. Go
Okay.
operating company because you have very heavy logistics.
Right.
But you have a lot of people, small jewelry shops you have to sign with and take pictures of the
Right.
gold. It's very, but I think the SaaS people, you can just do the holding company, and the city, we gave everyone their solution. Great. Okay.
Hisham, one question. Can't I register in India and have an operating company in UAE? Does that work?
It does, but no investor will invest in an Indian company. Not even Indian investors will invest in an Indian company.
Okay.
We know a few Indian VCs. They actually like Delaware, by the way. India is a lot of Indian startups register in Delaware.
Okay.
Yeah.
Yeah,
It's-
just something.
yeah.
So you told me if I don't have pushback, I can stay in Switzerland. But what was the other option if I have a pushback?
The US. You would go to the US.
Okay.
Delaware. Yeah. We did a few deals in Switzerland. It's fine. It's a little bit more expensive, but since you've already set up there, stay and then wait for basically your first major institutional check, and they'll probably tell you if they're okay with it or not.
Okay.
Yeah. All right. Let's go to co-founders. Who has Jean-Baptiste has two?
Yes.
Are you guys 50-50?
Not at all.
Okay. Okay.
He has 12% of the company. I have 66, and my family has the rest.
Okay. So you're full-time?
Yeah.
And is the other one full-time or part-time?
He was.
Oh, he was.
Right now, he had to find a job to get some money in.
Okay.
I stayed full time.
So he has a family, I'm guessing. Kids. And yeah. Okay. Then it happens. Madhu, how many are you?
I'm a solo founder.
Okay. You have no problems then. Okay. Sayed.
Right, so the company currently does not exist, but we're going to start with the company with my full ownership. Then slowly I will start actually giving away the shares even to the people who are working right now.
Yeah, but do you have a co-founder? Do you have a partner with you, or are you?
Bilal, yes.
Oh, okay. So there's two of you. Okay. Are you guys 50-50 also, your ownership?
No, currently the idea is that I build the company 100% ownership due to even citizenships, ECS, and everything movement.
Okay. Osman?
Yeah, so I am the solo founder, but I have employees.
Okay, you have employees. Tuhadul, you're solo or you have partners?
We have three co-founders. I am the CEO, and another is the CTO, and the third one, he has a 35 years family gold business. It's a popular one. So we have 33% each.
Okay, good. So you're my case study. Okay. Hasib.
So I'm a solo founder, but I do have an investor.
Okay.
And I'm trying to onboard a CTO currently, but I'm not sure how many shares I should give it.
Okay.
Give him.
Perfect. All right. Let us go to part 2, co-founders. All right. So this is our case study. So it's very easy. The way Tahidul has it, there are 3. I have 2. They're all full-time or they're all contributing something. Time, it's very easy. For any has a full-timer and a part-timer, twice as much. Yes,
please.
Owns twice as much as the part-timer. So Tahidul, we're gonna start with you. So let's say you have the 3 of you.
Yes.
You're all full-time, you're all dedicated, you're all,
I'm only full-time, rest are part-time.
Okay. Each. Do you own 1/3 each?
Yes.
Oh, well, you're very generous. Okay. I'm gonna assume you're all full-time. What happens if founder 2 drops from full-time to part-time, like John Baptiste? What happens?
Okay.
We take shares. We, instead of 10, it becomes 5 or it becomes 3, right? So this is when vesting becomes very important. Because right now, if there's 2 of you or 3 of you working at the business, you need a commitment. You need at least 4 years is the normal commitment period. It's 4 years of full-time work. If one of you leaves before this 4 years is up, they can't keep the full 10,000 shares, which is probably what happened with you, right, John Baptiste? When the guy stopped, you reduced his shares, right?
Actually not, because he started with 1.5%, and every 3 or 6 months he was gaining 1.5%.
Oh, okay.
But he can still rejoin us full time if we find an investor or things like that.
Oh. So let's say it's the same principle for employees and founders. So for those of you looking for also doing an ESOP, the most common vesting period is 4 years with 1 year cliff. You'll hear this over and over again. This means that if your employee or founder leaves during the first 12 months, this is the cliff period, they don't get any shares. That's it. So they have to finish the 1 year in order to get any shares. After they finish their 1 year, they get 25% of their shares. They get 2,500. The rest of the shares are 208 shares every month until they finish 48 months, right? Then at 48 months, they get the 10,000 shares. Does this make sense? Yeah. So if they leave here, they leave month 38, they keep 7,900 shares, they have to give back the rest because they haven't finished the 4 years.
Understood.
Yeah. So this can be time, this can be milestone. So you said you had one of your co-founders owned a gold shop. So
Right.
maybe not time, maybe they need to help you do 5 transactions a month, something, right? You can get very creative with what they have to do to own their shares in the company.
Okay.
Kassim, you asked about CTO.
Yes.
Yeah, you are founder 1, and now we want to bring in a CTO. So a big part of how much you give the CTO depends on how old is the business. So how long have you been working on it?
I would say about like 2 months, that's it.
All right, so you're probably closer to 30%. Right?
So with the same vesting schedule of the cliff investing. Okay.
Exactly. You would give them 3,000 shares, so it's 23, so probably 3,500. Okay. Yeah, 3,500 shares, 4,000 shares should be plenty. And they get 4 years, 1 year cliff.
Right.
Unless,
Right.
is he going to be full-time or part-time?
Part-time.
Okay, so not this. Not 4 year, 1 year cliff. Part-time, especially part-time CTOs, we only
It's
do.
essentially he has his own like software company, and the founder of that company is interested in joining at a CTO capacity. So so that means I wouldn't have to hire a whole team, right?
Yeah.
That's the idea behind it. Yeah.
Yeah, this is very common. So
Right.
what did they offer you for percentage? They said 30 or 20?
Well, not yet. I am the one who has to offer. We're having that discussion today.
Okay, so we see this arrangement a lot. It's between 20 and 30, but it's not a blanket 20 or 30. When they finish KPI 1, they get 2%. When they finish KPI 2, like you have to list exactly what you want them to do. And if they do it, you can give them shares. If they don't do it, they don't get any shares.
Right. Okay.
The percentage is less important than this schedule. So like I need the beta version done in 6 months. Right? If they don't deliver the beta version in 6 months, they don't get the 2%. By the way, this arrangement has high likelihood of failure, just so you know. We do a lot of these and we don't see them usually work out. So just have a plan B.
Can I ask why?
CTOs are in high demand. They stop working on your thing. They start working on the other projects that pay cash, basically.
Right,
That's
right.
what
And
happens.
if I offer a combo of cash and shares, because
That's fine.
that's what I'm thinking. Yeah.
Yeah, that's fine. But again, your cash payment and your share payment will be tied to specific deliverables.
KPIs. Right.
Yeah.
Okay.
And you need in your mind, if they miss 1 or 2 deliverables, you've got to terminate and walk away and go somewhere else.
Okay.
They are
Understood.
in very, very high demand. CTOs are in very high demand. So,
Of course.
okay, that is co-founder. Let me see. Let me make sure we covered everything. Ownership, we did this. Bad lever, good lever. Do you guys know the difference between a bad lever and good lever? Let's go
Yes.
back. Yeah. What is the?
That's what I did for my company. So if he was living by himself, I would pay his share like way less than if I was firing him.
Exactly. Yep. Yep. So we differentiate between when the founder leaves because they did something wrong, they left you in the middle of a project, they stole from the company, and it just life goes on and they can't work anymore, right? We usually don't differentiate between who leaves who because that gets very tricky. But yeah, we do differentiate between good leaver, they keep their shares, bad leaver, they don't get to keep their shares or they get to keep much smaller amount of their shares. All right. Oh, wow, we covered most of this. Okay. None of you have this issue because only 2. So if you have more than 1 co-founder, we have to discuss who's going to sit on the board, right? So usually the full-timers have 1 seat on the board, right? So if they're full-time, so if there's 2 full-timers, you have a board of 2 and maybe the 2 elect a third. And then we have something called reserved matters. Have you guys heard of reserved matters?
No, Hashim.
No.
No. Okay. So company registration guide. So here is a list. These are things you need like super majority consent. So if you're 3 co-founder, actually the best example is like 5. So instead of 3 of 5, you need 4 of 5 to approve these big things, like approve the budget, enter into big contracts. These are things you can't just do on your own as the board member. You need to go back to your shareholders and get either 2/3 or 75% approval. The ones in yellow are the most common, the ones most people pick. The ones not in yellow, we see them, just not as common. So it's not a lot. It's about 10 big things. These are the things. So you, John Bept, as the solo director, you can do whatever you want. except for these things in yellow, you have to go back to your family, for example, and because they're also shareholders.
At the moment, I have the ultra majority. That's
Okay.
how we call it in France. So I don't need. But we still have 3 people at the board. So my partner, me, and my father.
Okay, good. So you have something like this because your board is 3.
Yeah.
Yeah. Okay. And then for the best one, drag along. Has anyone heard this term before?
No.
Okay, so let's say you want to sell, but your co-founder doesn't want to sell. What happens? Want to sell the business, not your share, right? Let's say you get an offer from a big, I don't know, bank that says, I'm going to give you 100 million to buy your startup, and you want to sell the company, but your co-founder does not. The drag along gives you the right to sell your co-founder's shares on the same terms as you, as what you're selling. So you're dragging them into the sale. So this is usually if 75% of shareholders agree to sell, they force the other 25% to sell, right? This is going to be very important for, who's the med guy, the medical guy, Sayed. In biotech or anything health related, we almost always include a drag along at the very beginning because they're big acquisition offers usually coming in. Sayed even with us? Maybe he left. Okay.
He's here.
Oh,
So,
okay.
yeah.
John Baptiste, you may need that. Actually, the 3 SaaS companies probably need that from day one. The marketplaces take a very long time to mature, so you may not need it from day one. Yeah, so I think the 3 SaaS, John Baptiste, Medha, and Sayed, you'll need this from day one.
Actually, I think it's already done in my company when I
Great.
did it.
Okay,
I was helped by a lawyer, so that's why I already know everything.
okay.
Almost, I mean.
Okay, good. Yeah. Okay. I know we're running out of time. Can we do safes, Ayub?
I think we can have a quick overview
Yeah.
if you still have time.
Yeah, I have time.
Sure.
Who knows what a safe is other than John Baptiste, because he seems to have done all this already. Anyone heard of what a safe is? No. Okay.
Heard it many times, but I don't think I would
No.
be able to explain it.
Okay.
Yeah, same. Yeah.
So a safe is a loan. So if I want to invest in your company, Sayed, your company is still new, so I can't put a valuation on it, right? I don't know what it's worth, but I want to invest in your company. So instead, what I do is I give you, let's say, $100,000, and I say, when you have a valuation, you give me shares at that new valuation. Let's say I give you 100,000 in 2 years, you sell or you raise money from an investor and they value your company at 1 million. That means my 100,000 converts into 10% equity. Does that make sense?
Yes.
Yeah. Okay.
I have a question.
Yes.
What if the valuation is less than, or it doesn't matter, does it?
It does. We'll get to it. There's math. I swear it's coming. So the main question we get from founders is what is my valuation, right? This is at your level. it's very hard to put a valuation. So before you raise money from VCs or angels, you need to have an MVP, you need to have revenue and some traction. Without these, the VCs and the investors are going to eat you alive on your valuation. They're going to value you what we call a business plan valuation, which is usually $1 million. So if someone is going to invest 100,000, they're going to take 10%. But if you have MVP revenue should be about 10,000 a month, right? Actually, these two are probably enough, right? Then you can go to a venture capital fund and say, look, I have a product, I have traction, I need money to keep growing. Then they ask you, well, okay, how much money do you need for the next 18 months? Does anyone know what their budget is for the next 18 months?
Yes.
Depend on how much we give me.
Yeah, how much do you need for the next 18 months?
I could live with 200, like I could live with 1 million. So, I mean,
What they're going to ask you for a number. So the most common number is I'm giving you all. It's about $1 million to $1.5 million. This is very common number in MENA. It's probably higher in Europe. It's more expensive in Europe, but in MENA, this is about how much you need. In Jordan and Egypt, it's closer to 500. So, but in UAE, Saudi, most founders, after they have an MVP and revenue, need about $1 million to $1.5 million. Anyone have this number or close to it?
Yeah, my ask is 800K.
Okay, so you're very close. Great. Just bring it up $200,000 more, and you'll be right,
Okay.
right in the right.
Yeah.
What is the valuation? It's very scientific. It's not scientific. If you are younger, less experienced, you are going to raise, let's say you're going to raise $1.5 million, you are going to raise $1.5 million at $7.5 million, which means you sold 20% of your company. If you are an older founder, and this is your third startup, and you've had 100 exit, you're just more mature, you're going to sell at 15 million, right? So this is by the finance people hate it when I do this but it's within this range. It's between 10 and 20%. And the biggest marker of where you are between 10 and 20 is how much experience you have as a founder, not your idea, because now they're really just investing in you. Yes, no questions? Usually I get a lot of questions on this.
Actually, my question comes from a small comment you made before. When Madhu's like, she's asking 800. You said like, okay, go for 1 million. Why?
Because venture funds don't want you to keep raising money. So they would rather give you a little bit more so that you focus on the business. It does them no good to give you 200,000 that you burn in 2 months and then you stop work and go raise money, right? The idea is to give you some money and give you a runway of 18 to 24 months. So you stop fundraising, because fundraising is very tiring. It takes a lot of time and effort. So, yeah.
But wouldn't that affect even the valuation and how much you're giving to them?
Right. So if you have 800,000, right? I mean, she was very close. So if you have 800, the problem is they're still going to use this 10 and 20.
Okay.
Right. Maybe they go down to 8%, but they're used to, it's not just your startup. They know a lot of SaaS, a lot of marketplaces need about this to keep them afloat for 1.5 to 2 years.
So actually the logic, if I'm correct, it's almost balanced out, not only on the amount you're getting, but even the fact that you will give between 10 to 20%. So
Right.
knowing that you're giving, for example, knowing that I will be giving 20%, I'm trying to get as much money as possible for that 20%. Is that the level?
That's exactly it. Because at this point, it's rules of thumb. You have no cash flow, you have no history, you have no. We're just we're taking a good guess. Okay. All right. The math part of the equation. All right. We have three founders. This is your
Yes.
question. We have three founders. They own equal. We have an ESOP, which is the equity incentive plan you're going to give to your employees.
Right.
It's usually 10%. The norm is 10. So you signed the safe with Sayed. Sayed loves your business. He wants to buy gold. And he gives you a safe for $1.5 million at 15 million with a 20% discount. Now, what on earth does all this mean, right? So how many shares does Sayed get? We don't know yet. I have to wait till March 2028. So Sayed gave you the money now, March. March 2028, in 2 years, you have a priced round, which is an investor comes and says, I want to actually buy shares from you. I don't want to just give you a safe.
Okay.
I want to invest 3 million, and I think your company is worth 30 million.
30 million.
Right? So the first thing we need to do is figure out the price per share of the 30 million, which is 30 million divided by 1 million.
1 million shares.
Right, that's 30, which means they get 100,000 shares. Their part is easy. Sayed's part's the difficult one. Sayed has two prices. He has something we call a valuation cap price and a discount price. So the valuation cap price is 15 million divided by 1 million, right? Which gives us $15. Oh, sorry, go ahead.
No, it's the same thing. Yes, please go ahead.
And then the discount is 30 times 0.8. How did I get 0.8? 20%, right? What is 1 minus 80%?
Okay.
So I have two prices for Sayed safe. As Sayed picks the lower price, why does he pick the lower price?
He's going to get the more share.
Correct, he gets more shares. So between the two prices, the valuation cap price is lower, so he gets 100,000 shares. The final cap table looks like this. I don't know why it looks like this. All right. Wait, we don't have the ESOP just yet. Sorry, this was from the. All right. So the safe gets 100,000 and the priced investor gets 100,000 shares, right? But look at the difference, right? They both ended up with the same percentage
Of shares.
But one invested
Is
one
that
and a half
3 million?
One invested 3 million.
Right.
You guys can play with this, so you can put this 5 million, right? What happens in March 2028 if I only raise 1 million at 5 million valuation? Everything updates, by the way.
Right.
Automatically. So the idea is if your priced round has a low valuation, let's say it has 10 million, the discount price is better.
Yes.
So it protects me in downside. So I get more shares. I get 187,000 shares, not 100,000 shares. So actually, I will own more.
More.
Own more than the priced round investor. Right? Which if you look at it, yeah. I think I'll stop here. Any questions on, this is how safe is calculated. You guys have the list? Yeah, sorry.
Just to add here that when he's going to do the safe note agreement, so he will be mentioning which part he will take, the down value or the up value, right?
No, we
This-
put both and we say lower of in the safe.
Okay, understood. Understood.
Yeah. Yeah. That's it. Okay, we did a lot. We went through a lot today. Okay.
Hasib, any question? Hasib, you were asking me a question. I referred this legal session. You still have that question in mind?
No, I was just confused about the safe notes actually, because I had some trouble kind of understanding them. But with my current investor, we agreed on doing a safe note because it's really early on, but it's something he's really passionate about. So it's just, we will see on a later evaluation once there's more revenue.
Okay.
Yeah.
All right.
Any more questions for Hisham? So, Adil, any question?
No, any specific right now? No, but I think there will be some other questions coming in my mind the following day, that's for sure.
There's a lot. And
I will-
so,
Yeah,
Before-
email address of Hisham, and I will connect you with Hisham as well.
yeah. So here we have your guides, how much it costs to incorporate in Delaware, if you're interested. This is your ESOP, how to give employees equity, the ranges we see. There's a lot. I put a lot in there. And we even have, we also have templates. So we have a template NDA and a template safe. If you guys want to use it.
By the way, I actually clicked on the link. It says I send a request for access.
Okay, yeah. I'll give all of you access.
Sure.
Yeah. All right. Did you say? Oh yeah. Oh my goodness. All right. Share. Okay, you all have access now. Yeah. Thank you.
Thank you.
Thank you, guys. Ramadan Mubarak.
Thank you.
Thank you very much.
I will share library link and email address of Hisham, so
Okay.
you guys can directly connect with Hisham. Looking forward, and thanks so much, Hisham, for taking our time. And it was absolute pleasure having you with us.
Thank you.
Yes.
Thank you. Thank you. Thank you so much.
Thank you very much.
Bye,
So
guys.
Yeah. Right. Take care.
Bye-bye.